Let's bring in Ankur Crawford of Alger. She's back with us at Post. Nice to see you again.
Good to see you.
You, of course, have, tech is front and center always for you. So Apple's down almost 5% month to date. That's definitely led to a more uncertain and a little bit, I guess, more rocky environment in tech, hasn't it?
Yeah, I think the overall market feels a little bit choppier than we've seen for the first 9 months of this year. And in part, China, that was supposed to work and supposed to come out of COVID, didn't come out. Europe, admittedly in a recession. The U.S. consumer is showing signs of a little bit more pressure on the consumer. So we're headed into choppier markets, and that's basically just water falling into tech.
You guys are underweight Apple, but do you generally feel as though, as Apple goes, so goes the market right now, just because, it's been a market-weighted show for the most part since the beginning of the year? It's the biggest stock in the market.
Yeah, I think that there are other stocks that are leading or also, flags for the market, whether it's Microsoft or Nvidia, as well as Apple. I think it's not an Apple-only game this time.
Yeah. What about the rest of tech? Do you feel it's a little wobbly? Do you think it has the staying power? Do you still feel it's viewed as somewhat defensive, that if there is, a bit of rockiness in the market, once things settle out, this is going to be the place to be?
Yeah, so as growth becomes more elusive, what we tend to do is go towards growth. And in part, in companies that have product cycles, and in part we do that because that growth is somewhat disengaged from the broader economic volatility. So I think because of that, and because of this AI story, because of the product cycles that big tech is bringing to the table right now, that will act in a more defensive way.
What about valuations? Some would suggest that they're still, you're smiling, because, everybody's talking about this very question as to whether, where real rates are, whether overall valuations are too rich, and then they front and center, they zone in on tech. And these mega caps that say, well, they're way above their historical averages almost across the board.
Yeah, and I would counter that by saying, which company are they talking about? You take Meta. Last time I was in here, you asked me the same question about valuation, and I said, Meta is cheap. Well, Meta's numbers went up, and the stock is 6% lower than it was into the quarter. So the stock is still inexpensive, kind of trading at a mid-15 times multiple on 15% type growth. So the valuations don't necessarily seem that stretched to me. Some of them you have to look 1 year out, like in Microsoft's case. But remember, 85% of Microsoft's revenue is recurring in nature.
I'm looking at, some of these stocks, over the let's say the last week. I wonder how you feel about Microsoft. Microsoft's not getting a lot of talk these days after sort of stealing the show, as it were, with AI, until Nvidia, of course, blew everybody out of the water. But this idea that, the stock's down 3% over a week, hasn't had the greatest move of late. How do you look at that now?
Yeah, look, I think when you think about some of these businesses, you have to take a purview longer than a week, longer than 4 weeks, longer than a month. And for companies that are up 40%, 200%, 150%, they need time to breathe. And, by looking at these stocks on a daily basis, it can actually be confusing for investors. So you have to kind of look at the phrase and not kind of the staccato and individual notes.
First question you asked me when you sat down was about what stock? Remember? Nvidia. You asked me, what's Nvidia doing? Well, right now, it's red. And, it's been a little shaky lately, a little bit. How do you view where that valuation has actually come down?
Yeah.
Right, over the last several months. It was, once that company, the last 2 quarters, once it reported earnings and gave the guidance, it actually, on a valuation standpoint, got cheaper.
Yep. So Nvidia, on the whisper number on the street today, trades at 22 times. That is not on 2024. That is not an egregious multiple for Nvidia. If you look at the long-only holders, there's a lot of big long-only holders that are still underweight the stock. The demand for the stock to buy is still there. I think the whisper on the street is, if it comes in a little bit more, we're going to top up our positions. So, again, I think when a stock goes up 200, 250%, we've got to give it time to breathe, and it's healthy for the stock as it consolidates in place. I mean, if you look at the fundamentals for Nvidia, just last week or 2 weeks ago, they put up a software update. It doubled their performance. There's no denying the dominance that Nvidia has in this market.